What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So yeah, this is my first time. This is the first time I've sat in front of the chart since about Wednesday or Thursday, I think. So yeah, when I'm sitting here me sitting here right now is the first time I'm approaching things, which is great because it gives us fresh eyes. However, it does mean you're going to have to be patient with me. So definitely get comfortable, get your drinks, get your snacks, and we're going to see what we can find. So you can see how dollar's been rallying very aggressively to the upside this month. Caught me off guard a little bit, especially when I was expecting this bearish order block to hold its place, and now you can see that we've traded well above that, and it looks like we're probably going to close above it as well. So when we see things like this, when we're closing above bearish PD arrays such as bearish order blocks on a monthly level, it just shows that the higher time frame is clearly bullish and wanting to continue to the upside. Wanting to get up into those premium prices. Where it's going to exactly, well, this is obviously a massive bearish order block, and this will be its next target. So once it runs out of these highs, which I am anticipating to get taken, so I will get that delineated. Once it takes out these highs, I then want to see if it can trade up into this bearish order block. Now, it's not I doubt it's going to do it in one sweep, but then again, after the past 2 months, I can't really say that. But ideally, it doesn't do it in one sweep. However, I'm looking for this monthly high to get ran, and then this will be my target, and this is where I would want to see a reaction. Otherwise, yeah, it'll be very interesting to say the least. So let's drop down to the weekly. We'll take a closer look, and you can see how crazy last week was. And do note that it stopped just before these highs. This is typical of price, especially when, you know, there's a lot of liquidity residing up there. It's likely that price will probably pull back a little bit, maybe retrace, or maybe even give us a down week or a few weeks of consolidation before I'm expecting it to get ran. So we do need to take that into consideration. And another thing to take note of is we are entering the horrible month of December, where it tends to be consolidated anyway. But one thing I do want to draw our attention to is definitely this rejection block level. So why is this a rejection block level? Where you can see that price has traded into it 1, 2, 3, 4 times, and then been rejected away from it. Failed to get above the 50% level here. All of volume stayed below here, and only now have we penetrated it one more time. And whether it gives us a reaction or not is another story. But generally speaking, we know it's a rejection block level because of how price has treated it here, how price treated it here, price's failure to get to it here, and the fact that we're penetrating it now is quite, you know, interesting to me. So I just wanted to draw our attention to that, especially since it's such a long wick and significant wick. And it's significant because, like I said, all of this volume remains within it. So if we are going to use this wick to refer to, if we are going to use this wick to refer to, what we can do is split it into quarters, and it might give us some interesting levels that we can key off as we drop to the lower time frames. So let's just get this 25% level, since that's what we're pretty close to. We'll make it dashed, and then when we get down to the daily, I'll be looking around this level to see if there's any PD arrays that can help us, because remember, we're anticipating this high to get ran. Whether it happens this week or not is a whole nother story, but generally speaking, that's what we're expecting. And in terms of news this week, let me take a quick look. We do have high impact news on dollar on Thursday only Thursday. Yeah, we only have news on Thursday, so Thursday and Friday, my bad. Okay, yeah, Thursday and Friday we've got high impact news. So a typical week in general. In terms of the news, it's nothing too crazy, and hopefully it'll help drive some movement that can get us in on some trading. So here's the daily. You can see we had a down close day on Friday. Quite interesting. Tap down into this fair value gap. Honestly, if anything, I do see this as a level of support, as in I don't really want to see price dip much lower moving into Monday and Tuesday this week. I'd happily see price continue to rally up. Obviously, we let Monday trade. I don't usually trade Mondays. But generally speaking, if we are going to retrace, then we obviously have to look at this fair value gap on the daily. Let me just go back to it. Right here. And the reason for that is because obviously you can see how we've tapped into the 25% level there. It's fine for price to tap into it again. It's not that you can't do that. It's just that ideally, if we're going to remain bullish, and we are going to keep seeing this bullish, you know, movement to the upside, I want to see price ideally respect this low. So Friday's low stays intact, and I'd like to think that we can trade on higher. There is an implied fair value gap right here. And remember, there isn't a high impact news until Thursday this week, so we might find that we're in a bit of a consolidation running into Monday and Tuesday, and that price is moving a little bit slower. So again, Monday I wouldn't recommend trading, especially when we're just in the midst of a consolidation like this. And like I said, although I want to see this stay intact, it wouldn't be the end of the world if it snatched it and then traded on towards our targeted high up here. But generally speaking, and just rule of thumb in general, especially with ICT concepts, is we shouldn't be seeing bullish PD arrays get disrespected. So this bullish order block right here is significant because this will, so long as this stays intact, as far as I'm concerned, we are still bullish. You know, we should assume bullishness, and until proven otherwise. Nothing here suggests bearishness, so when we do see any kind of bearish movement, which we likely will because of manipulation, we assume it's suspect and allow price to drop, and then with the expectation for it to be able to reverse and pull back on itself and to continue expanding to the upside. If this low gets if this low gets violated, whole nother story, and we can start looking into it. However, for that to happen, I do think it would have to be off the back of high impact news. So again, I wouldn't be surprised if we stayed in this range for consolidation, moving into Monday and Tuesday. But I don't think it's going to be the cleanest week. Wow, it's not going to be the cleanest start to the week. I don't think it's going to be clean until about Wednesday, to be honest, as in good trade setups and whatnot. So yeah, that's everything on dollar. I hope that all makes sense. Not really much to say, especially being in conditions like this. Like I said, it's not ideal. So, and then another interesting thing right here is this gap. Let me just drag this out. This is on the hourly, so maybe not too significant. But the reason I'm drawing our attention to that is because moving into Monday, price should stay below this for now. So Monday will probably give us a down close. I wouldn't be surprised, especially with imbalances such as these below here and a breaker, low, high, lower, low. You know, price can easily come down here. It's just when you see gaps like these and you see how we're wicking into it, wicks to it here, it will help us until we get above that. We probably will see retracement and consolidation in this range until it has the energy and sentiment to then trade above and through that gap to the upside. Now this is just one gap off many. It's just that stood out to me, and this is a 4 hour, and I do like to let Mondays trade, so do take all these things into account. Obviously we need to see where Sunday opens, but in tomorrow's video we'll have the Sunday opening marked out, and we can use that for reference as we move into the rest of the week. So let's now head on to GBP USD, and you can see invertedly, how pound's been falling very aggressively, which is horrible to see. The poor pound losing its power after such an amazing couple years. Anyway, so we've now traded through this bullish order block. Again, what does that tell us? It tells us that we're likely bearish on a very high time frame, so we can expect continuation to the downside. We have a rejection block level right here on a monthly level, so I'm going to mark that out, and this is where I'll be looking for price to target. Again, it doesn't mean it's going to get to it tomorrow or the next week necessarily, but this is our draw on liquidity. The fact that we're now below this bearish order block, I'm going to use it, and I'm going to split it into quarters, because now that we're below that 50% level, that mean threshold, it should act bearishly, because any PD array by ICT is exactly the same in reverse. So like, if it's a bullish order block on the downside, it should act as a bearish order block. Now that doesn't mean I can go and mark out every single order block and everything. The charts will get messy, but higher time frame model PD arrays like the monthly are usually more essential, because it's more likely that price will react to those levels because they're more significant. They're on the higher time frame and they take longer to churn. So here's the Wednesday's price action. Here's the weekly price action. Here's the weekly price action. Run out these lows. Beautiful wick right here, and you can see that's in the range of this bearish order block. Again, very interesting. And if we look at the volume of it between this high and this low, 50% level is around here. But generally speaking, we now have a range where if price does manage to retrace into, we're going to expect shorting opportunities, because again, we expect it to provide resistance with the assumption that we are going to be running down into our rejection block levels and potentially lower down here. So again, as we drop down to the daily now, and we also have an inversion gap here, low, high, drag that through, same thing. Any kind of retracement up to that, I'd want to see resistance, but I doubt pound would have the strength to be able to do that anyway. But if we go to the daily, and you can see how we also had a down close day on pound. So the fact we got a down close day on pound at the same time we had a down close day on dollar, that already says a lot about the chart's conditions and why they're not ideal to be trading in. So don't be too harsh on yourselves if you're struggling right now, because it is difficult. I only traded like once last week, and I was trading against the curve, which wasn't ideal. But generally speaking, it isn't nice times, and as we approach December, it's only going to get worse. But nonetheless, let's say Monday we do have an up close, that's completely fine. I'm happy for us to see some rallying. Again, I'm watching these levels particularly to help provide resistance, and I do want to see continued push towards that downside and rejection block level where there's a little imbalance as well on a daily. Beautiful little fair value gap right there that price may want to try and trade into. Again, doesn't have to do it this week, but we have a drawn liquidity, and like I said, we might find ourselves in a lot of consolidation before we see significant expansion this week. So do be patient. See, we do have a lot of high impact news on GBP as well, so we'll probably see, you know, some alright movement, but you know, any kind of rallying I'm expecting to be suspect, and ideally price doesn't violate this level. They can violate this one. It's a 25% level off that order block from the monthly. 50% I don't expect or need to see price get up there. They shouldn't need to do it. As far as I'm concerned, this is redistribution. This should be redistribution, so I'm happy for price to stay in these ranges. We can even look at this range with volume as well, and then that's where I'd be looking for opportunities. But again, easier said than done. But yeah, Monday will help us draw out the Sunday opening as well and give us an idea of where price is. So we're going to finish up on Euro. Of course, we'll start here on the monthly as well. And you can see Euro's kind of just hanging on its very last thread before it runs out these lows. Similar to dollar, at least Euro's a little bit more in line with dollar. We have these lows which I want to see get traded to, and then we have the fair value gap here. So again, I'd expect a down close week. That means we want to see some kind of rallying at the beginning of the week, but not too much, especially not in these conditions. And then we can use bearish order blocks the same way we just have been. Now there's quite a few, so it's like, which one do you use, right? I do like this one because it's the last significant swing before we had the high that moved lower. So we have a high, we have a low, we have a high, and then we're expecting this low to get taken. So if this low is to be taken, that would make this range between this high and this low a breaker, and then we can look at the last down close candle and split that up the same way. But again, easier said than done. I'm not going to do that in this condition just because I can't necessarily trust that, if that makes sense. It's all, although I'm explaining it and it sounds sensible, doing it is another story. But let's go to the daily, and we might be able to find some premium PD arrays that we might want to use. So we did have an up close day on Euro. This is what I mean. Euro's more of a good has better behavior than pound. I'm happy to see rallying on the Monday and Tuesday. Ideally, we stay within this range. So this fair value gap right here, let me just drag it out. You see how we traded into it and left it. I don't really need to see price trade back above there. As far as I'm concerned, this should continue to act as a bearish fair value gap. So where can it trade to? Well, we can obviously split this large wick. We can look at the 50% level, and then any kind of premium that gets offered here at the same time that dollar, like I was saying, drops down into its ranges here and here. I'd be looking for opportunities for trade setup, so to speak. So let's go to the 4 hour, and you can see I've just been playing around with that fair value gap. And again, look at this price action right here. This is classic. We've got a low, high, lower, low swing. This last down close wick, that's technically a breaker low, isn't it? Now I don't think we traded into it yet, so that's another reason as to why we do need to be careful that price may actually rally up there first and then want to drop lower and start running for our lows. Don't get me wrong, Monday could open and we could just start running straight off the charts and running for these lows. If we get to these lows quick in the week, then we'll probably get a nice Thursday reversal, but we'll talk about that on the Wednesday, in Wednesday's video. But generally speaking, if we don't start running straight down to price on Monday or Tuesday and we don't see a lot of movement, there'll probably be heavy consolidation, a lot of back and forth, a lot of wicks, a lot of us staying in this range, and then it'll come to like Wednesday or Thursday, and then we'll drop and we'll see it move and start running like this, you know, just clear movement, clear displacement. So yeah, again, consolidation. When price is consolidating, what's it doing? It's accumulating or it's distributing, right? There's significant price levels here, so we just need to be time conscious of things like this, because it's all manipulation. It's there to drive you insane. But remember, we have a directional bias. So again, when we're rallying in times like these, we need to use the opportunity to go short. we've got a swing high here and a swing low here. This is our current trading range. And what we can do is we can between premium above the 50% level and discount. So if we find on Tuesday that we're trading up in this premium and we're still bearish, and there's no reason to expect a reversal at this point, which there, as far as I'm concerned, there isn't. Once we're in that premium zone, that's where we should be looking for opportunities to go short. So again, allow for rallying. If price wants to rally, let it rally. Same on GBP. If we get some rallying, let it rally. Dollar, if we get some discount, let it offer that discount. And then when we get to Wednesday, we'll assess, and then we'll see if we can get in on a nice Thursday reversal, which would be ideal. For me to change my bias completely, again, look at this trading range, low to high. I'm looking for price to get down below that 50% level of this range, which is what I was highlighting here. But if we say violate this low, whole nother story, and we're probably going to start running all the way down here, and that's a whole nother, that's a whole nother story. We don't need to worry about it for now. But my point being, price should stay within the current trading range so long as we're going to remain bullish and reach our target. And like I said, it could just run straight up there, but I doubt it after seeing all this rubbish. So yeah, that's going to be everything, guys. I hope that all made sense. Don't forget to join the Discord, smash subscribe, join the mailing list, drop a like, drop a comment, and yeah, I'll catch you guys tomorrow. Peace.